Let's talk more about today's tech rally. Our next guest says the Nasdaq 100 has even more room to run, but not everyone's coming along for the ride. So let's go off the chart with Chris Verrone of Strategas. Chris, take it away.
Hey, Melissa. Yeah, I think this is actually a pretty tricky tape, and I know we're entering kind of that 4Q good seasonality, but I do want to be maybe a little bit more selective than I typically would this time of year. And let's actually start with the S&P. Let's remember S&P peaked about a month ago. S&P down about 6% from the highs. But remember, most stocks actually peaked in late April, early May, particularly the more cyclical parts of the market. The average issue is down closer to 15%. What I thought was really interesting over the last few days, kind of heading into this morning, you had 3 successive lower lows on the S&P, Thursday, Friday, Monday. But what was curious was fewer and fewer stocks were making new lows at each one of those new index lows. So if we bring up the first chart, just showing you the percentage of S&P stocks making a 1-month low that actually has been declining for about a week now. So I suspect most stocks here are bottoming. I'm not convinced the index has necessarily bottomed. And kind of that's that odd dynamic when a handful of names really command all the weight in the index. What the average stock is doing is often a little bit different than what the index is doing. There's nowhere where that's more pronounced than NASDAQ 100. And if you bring up our second chart here, NASDAQ down about 8. But I think we need to be aware only about 55% of the NASDAQ is still above its 200-day moving average. Going into the fourth quarter last year, that number was something like 85 or 90%. So the internals were a lot better a year ago than they are today. That tells us, as we look to the next couple months, we have to be more selective than we otherwise would this time of year. So I brought along 4 names that I think are worthy of our attention here these final months of the year. I do like Netflix long. Netflix has kind of been the anti-FANG. It hasn't participated with FANG all summer. It is now starting to break out and show some relative leadership. It got through 600, 620 over the last couple of weeks. We like that to 725. The relative has turned there as well. I like Cisco here as well. You've had a good correction in Cisco. Part of the more value-oriented tech. It's a great long-term chart. It got very oversold over the last several days, right back to support, kind of in that 52, 53 range. I think you want to put exposure on. NASDAQ 100 is not all tech. There's consumer here too. And Marriott in the hotel space, there is momentum behind all these travel names. We like Marriott long. This is a name that has momentum. It's a great long-term chart. I think it's going to 175. Really good picture breaking out of a base. And then there's one name that I don't want to touch. And I think we have to be very skeptical of Amazon here. This is a name. There are 60 analysts who cover Amazon on the street. All 60 of them have a buy rating on the stock, and no one's made money here in 18 months. That's a bad combination. Frankly, I thought it was a pretty tepid bounce in Amazon today. Watch 31.75. If Amazon can't hold 31.75, it's going lower. So 3 names we like. One I think you got to be careful with, but overall, maybe a little bit more selective into these final months of the year.
That was strong, calling out the sell side on Amazon, Chris. Jeff's got a question for you.
Yeah.
Hey, Chris, Jeff Mills. I read your stuff. So looking at some of the recent reports and thinking about the strength in the market that we've seen reemerge and talking about some of the areas of the market that have been beat up but are starting to recover, and now you're seeing 95% of financials above the 200-day, 95% of energy above the 200-day. I mentioned 100% of banks above the 200-day. So how do you differentiate that type of strong momentum versus sort of near-term overbought versus that being a signal of longer-term strength?
Jeff, I thought at the top of the show, you actually said it very eloquently how you were describing it as this growth scare ends. And I agree. I think this growth scare that's been with the market for 4 or 5 months is coming to an end. I'm not sure that's great for the index. That might be very good for the average stock, the average cyclical that's been correcting since May or June. And I want to always position, particularly this time of year, in the direction of momentum. Financials have momentum. Energy has momentum. Reopen has momentum. I'm not sure tech or long duration names or the ARC type of stocks have the momentum here. Pretty tepid bounces there today. I might be more inclined to fade some of those moves than I would be to chase.
Fade, including Microsoft, Chris, just quickly, since we did lead the show with that, and made a big deal about
Mel,
how it's resilient.
Yeah, it's funny. These corrections typically aren't over until everything gets smacked around. And I thought it was interesting that you observed that Microsoft is the only one of the big techs not down 10%. Does this have to go down 10 before this ends? That would be my guess here. I might be a little bit more careful here.
All right, Chris, great to see you. Thank you. Chris Verrone of Strategas. Dan, what do you make of Chris's advice?
Yeah, I like it, and I think it makes sense. I mean, we didn't really have that very disorderly day yet where it feels like capitulation. So I don't think down 5.5% from the peak is it. I suspect we're in a kind of one step forward, two steps back. I will tell you that I think the last battle fought in this market is going to be Tesla. We know Tesla's had that massive run. It's made a series of higher lows and higher highs since that mid-May. I think it was trading 550 or so. Here we are at about 780, and that thing just hasn't budged on any of these big down days over the last week and a half. So when that thing gets sloppy, when you see that thing south of 700, that's probably the sign that you're going to start seeing money flow back into Microsoft, Apple, and some of these other big names.